This morning, retail earnings season got rolling, and Walmart kicked things off in a style with tremendous quarter. The largest retailer in the world beat expectations on every line. The darn stock was already trading an all-time high coming in. It tacked on another 3% today. Could have more room to run. Earlier today, we got a chance to speak with Doug McMillon, Walmart's bankable president and CEO. Take a look. Doug, welcome back to Mad Money.
Thanks for having us back.
All right, this is a very big day, Doug. This is a true blowout, and I want to get right to it. You had traffic up 4%, and the reason why that's important is because most people are having big numbers by raising price. That is not the case with Walmart.
You know, Jim, we really had a good fourth quarter, finishing off a strong year. Our associates are doing a great job, whether it's in stores or Sam's Clubs or around the world, including in our e-commerce fulfillment centers. And hats off to them for driving a really successful holiday season here in the U.S. and around the world.
I can't help but note that in a world where we're very worried about inflation, you have held the line. And one of the reasons why I think your stores are packed is because you can save a lot of money going to Walmart right now.
People are always looking for value, and so we want to offer that to them across our entire assortment: food, consumables, general merchandise, apparel, everything. And we also want to do it with private brands in addition to brands, and they both matter. And we've done a good job, I think, of keeping our prices in a good range and trying to provide some relief from the inflation that our customers have been experiencing. Our general merchandise prices, things that are not food or consumable, are actually down versus a year ago and comparable to 2 years ago generally. And then on the food side, we're seeing some of our fresh food categories come down, but processed food, dry grocery, and consumables still have a 2-year stack of inflation that's problematic, like mid-double digits. But this year, compared to a year ago, prices are up less than 1%. So I think even in those categories that have been more stubborn, we've been fighting hard to keep our prices low.
Well, you're holding the line. You're doing the Fed's job. Now, you are doing some incredible technology here. The buy of Vizio seems brilliant to me because you should tell people how much money you're making in advertising and how this will augment that.
Yeah, well, I think for the year we finished around $3.8 billion globally, up about 28% in our advertising business. As you know, when you grow your digital reach and you've got an e-commerce business that's scaling like ours is, and by the way, e-commerce finished the year at $100 billion in sales for the first time, which is exciting. As you grow that, including the marketplace, you get an opportunity to sell advertisements. And we can connect the dots for advertisers. You know, if they advertise with a digital ad, for example, and the customer transacts a week later in a store or club, we can connect that up for them and let them know that the ad really worked. That's the differentiating advantage that we've got. And with this purchase of Vizio, we are intending to be able to expand our opportunity to serve customers and help advertisers have an opportunity to connect even more dots.
Now, I know you do have a deal with Roku. Is it more the merrier, or should just put all the chips on Vizio?
More the merrier. We've got a relationship with lots of different people, and that'll continue to be the case. We want to sell what customers want to buy and provide access. So that's our plan.
Speaking of relationships with others, one of the things that's so impressive is you have inventory. It seems like you've finally done it. You've done the holy grail of what I want a merchant to do, which is figure out inventory. I know that Apple is talking about how they're helping you with the Vision Pro on shelf and figure out what should be on the shelf. How's that working?
Yeah, we have a great relationship with Apple and with others, both digitally, trying to make sure we're presenting their product well, but also in store. It is very much a collaboration. We want to make sure that customers have all the information they need to be able to buy what they want to buy, and especially when it's a higher price point.
Okay, so a lot of people are making the fact that there's going to be some problems with GLP-1 and stores, monthly spend on categories that have been impacted. I hear that, and I know there was some comment, maybe we can try to refute that or change that, about whether it's hurting store just in terms of sales. But you're a health and wellness company now. Can't you pivot and use this data to be able to say, look, we're going to devote more of our floor space to health and wellness because we see these categories going down?
Health and wellness is really important. As you know, we've got a large pharmacy business, a large vision business. We're in the hearing business. Over-the-counter is important to us. Of course, all the things that go along with that, like beauty. We're experimenting with healthcare clinics. So we definitely prioritize health and wellness. On GLP-1, nothing new to report today. When we look at it, we think it's just too early to tell how things are going to play out. But as you know, our food business is strong.
but any, let's say, degradation in snacks, pastries, ice cream, versus, say, seeing yogurt, fish, vegetable snacks doing better?
Customers are buying all the above. I think you pointed out not long ago that we've got a strong organic offer today. We have a very strong fresh food offer across categories. We're doing really well with the food business. Okay,
I'm going to go there because I think there's some tremendous lack of knowledge about Walmart. One of the points you made, both CES and here, the $100,000 and more demographic. People do not realize that is the new Walmart shopper.
Jim, everybody's looking for value and everybody wants to save time. They're looking for convenience. So I think in our case, the fact that we can offer a store and a club when you want it, we can do curbside pickup, we can do delivery in various forms, that enables us to just be able to serve people however they want to be served. And for those that have more money and want convenience, we've now got the Walmart Plus membership. We've got all these ways to deliver, and our assortment just keeps getting better. We've made progress through our store remodels with our apparel offer and presentation, and that's just one example, I think, that might help us be able to retain people with more money as the economy comes and goes in terms of its strength.
Now, if let's say I want it by drone, can you get it to me?
Yeah, great question. We announced at CES that we're going to be taking drones to Dallas-Fort Worth and cover about 75% of that huge market by the end of the year. We've done over 20,000 drone deliveries already. We've been operating multiple delivery stations with different providers, and people love it. So I think it's just one more piece of the puzzle to help people save more time.
I want to go over something you just mentioned, which is the fun of a store, and also the AI. Now, you know, because I shop there with my daughter, I know you follow us, but she happened to buy the combat boots. She bought the crochet top. She, with her friends, bought the Valentine's Day hearts sweater, which was what you mentioned in the call, that people, that's what they're doing. Her friends, they're all going and looking at what each other's buying. This is new.
Jim, you know, most of my background is in merchandising. I love buying and selling merchandise, as do we all around here. And the items you mentioned are great examples. It should be fun to go into one of our stores and clubs and shop. And I think it is today. And the seasons help with that. I mean, we roll on from Valentine's to Easter. Before you know it, it'll be back to school and then holiday again. The store's always changing. And when you walk into a store, you can see color and you can experience things, smell and other things that make it really fun to go and check the stores out. And I think that's why our traffic's up. It's more than just utilitarian. It's also a fun experience.
Oh, my God, it's incredible. I mean, you know, I'm used to Costco having the treasure of it. You guys have it. The other thing you seem to know, inference. You seem to know what I want. I walked in December trying to figure out what to do Super Bowl. Bingo. You had this whole area of everything that we wanted, a giant area. Did you use inference and AI to figure out what to put there?
Yeah, we use a lot of technology to help us make those choices. And in the end, what we're trying to deliver is a shopping list. If you did have time, everybody's busy and you and your family are busy, so you don't have time to really think through maybe the Super Bowl party. So when you walk into either our app or you walk into the store, it should be like we about read your mind. And you know you need soft drinks, you know you're going to need some chips and dip, you know you might want a new TV, but you know you're going to need quite a few of these items. And if we lay them out in the right way, it leads to more incremental purchases, more units in the basket.
Oh, it's easy. It's fun. Now, I want to go back to something you said at the very beginning for my last question. You talked about the associates and how great they are. Now, you gave wage increases. A lot of people felt that was wrong. It obviously was, you know, they would hurt your gross margins. Obviously not true. But you also are giving the 400,000 people participating in the stock. They're going to get the split. They're going to get the dividend increase. This is major for your associates.
It is. You know, we've had a long-standing situation where a lot of our associates are shareholders, and that's what's happened here. It's exciting that we have 400,000 associates that participate in our share purchase plan, where the company pluses it up by 15% on the first $1,800 a year. So you get a generated return from the company, even if the stock didn't move. Now, in this case, what we're trying to do is to help our associates feel like they can buy a whole share faster. It just feels better to be in a position where you can buy a whole share through payroll deduction. And we also gave equity to our store managers here in the U.S. for the first time, and people are really excited about that. We see a plan over the next few years that we're very excited about, and we're trying to send signals to our team that we want them to participate in the upside, have more than just a job, but build a career and build wealth for their family as they're doing it.
Well, you're doing great things. I want to congratulate you on a true blowout, Doug, and just an amazing quarter, and thank you for holding the line on inflation. The country needs you.
You bet. We'll keep doing it.
All right,
Thank you.
Thank you. That's Doug McMillon, President and CEO of Walmart WMT. This was a blowout. This stock is not done going higher, and it's because of what this man and the associates are doing. Mad Money will be back after the break.
Coming up, Cramer checks under the hood. Reactions to Robinhood's latest report next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.